Good morning to all. Today we're going to focus on the S&P 500. The index has taken a significant technical, let's say, hit, dropping not just below the 50-day moving average yesterday amid the broad tech wreck, but also for the fourth consecutive session. It's Thursday today, of course, and with a double top on the S&P in place and momentum also below the 50 RSI, which is supposed to be shifting sentiment from bullish to bearish in this particular case. At least we are looking at a short setup targeting at the bottom of the November 21 low and perhaps even the more rounded up level, 6,500 on Monday, on October 10, Friday. So let's break down the structure and the trade plan. On the chart, we do have a rectangular range. Clearly, price action is confined within the 6,930 or so to the 6.5 handle. Okay. And we have had a double top, obviously, but we have also had a double bottom, pretty much, with a early sort of buy power, buy in power, if that makes sense. So now that we are below the 50 Fibonacci retracement, as we were back on November 17, there is potential, of course, for further downside all the way to the other side and even a breakout of that. Obviously, we're not going to know until we get there, but for now, that's the current technical, at least, indication. And interestingly, and let me just take that rectangular shape off now, we have just retested the 50 Fibonacci retracement here, right? So there is potential for short-term bounce towards the 38.2 Fibonacci, perhaps even the 23.6. But I will think that if we were to continue lower, we would probably just hold the 6.8, which is the previous low that we saw on December 1st. So in my mind, we want to sell a bounce rather than also chasing the breakdown. And I will explain why. Because if we go down on the 4-hour chart, the RSI started to turn. Okay, and we have had some sort of double bottom here anyway. And on the 4-hour, we see now a potentially reversal candlestick pattern. And that was an inside candle as well. So the 6.765 also becomes a level of interest. So it is a case where if we enter the breakdown, we would rather to do it after a retest. For example, we enter here, the second wave down, right? Because if we enter it now, it might be a minimum move to the downside and prices would eventually just go back up. So that would be a risky trade to take, if that makes sense. So we can be looking for a 50 entry, but after every test. Okay. For now, of course, the only entry that makes sense is this. But I will be potentially looking for this is an aggressive entry. We would be placing our stop loss just above the 50 a day or above the 23.6 on the 4-hour, let's not forget. And then our stop would be the previous low. And this is a very good risk to reward ratio eventually. Obviously, in between, we can move to break even, take profit 1, take profit 2, and let the rest run. Even below that level, because that risk is there even so early ahead. The other entry is to, instead of aggressively entering here, to wait for the correction, as we said, and placing our entry down here. It changes a little bit the risk to reward, but essentially it's the narrative is the same, a little bit more confirmation because we would be seeing a resistance forming at the next leg to the upside. Obviously, if we do lose the 6,800, then this is where things start getting a bit um, more risky, and that would be a case to start considering, loosening some of that downside risk. So this is the setup. Also on the other side, we don't see any signals currently. Remember though, on the macro sort of drop yesterday was driven by a sell-off in high value tech stocks and also crypto, plus mixed signals from Fed Governor Wellen about the pace of 2025, 2026 rate cuts. He sees potential for a rate cut, but also he said that the timing is important. But some sort of indication that it can be pushed further back since inflation remains high. This is a macro environment that is currently risk off, which supports further downside bias as well. So the trade plan is to short the 38 or 50 Fibonacci, put a stop loss close to the 6,830, and then a eventual target at 6,500. So good luck and trade safe.